Just looking at the chart on Bitcoin here, I think this is a fascinating chart where you see that we've had this, recent move up that's been really dramatic. Even today, Bitcoin's having a great push. But if we look at it, it's actually in a parallel channel. And you can see up here, and then a couple days ago, we hammered on the 26,000 level. Today, we pierced that level a little bit, and we're still kind of stuck in this sideways channel of price action. So at least over the next, let's say, 1, 2, 3 weeks, this channel is what I'm following very closely. Can we get above? Can we stay above? If we can't, and we kind of hover here, I would start expecting the Bitcoin price action to come back in. I also wonder if, let's say the banking crisis does slow down and we do see some stability. Do we see the money that was put into Bitcoin because of that instability being pulled back out and going back into the fiat system? And this is going to be this is going to be a really interesting situation to watch how this reacts. How do investors that put their money from the fiat system into the Bitcoin market, how do they react over the next couple of weeks if we see stability come back?
The U.S. Federal Reserve on Sunday announced it had joined hands with other major central banks to ensure a steady flow of the U.S. dollar, a dominant reserve currency in the global financial system. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
Yeah, so price target wise, I think ultimately I am on the downside here. I think as long as we are still up against this line, we have to respect it. So I'm looking for a pullback to the lower end of that channel, which is around the 20,000 level. Eventually, I think that actually breaks, and I do think we ultimately test over the next 2 to 3 months, we test that 15.7 level again. And again, hate to be bearish out there. I know so many people are bullish. I'm just not seeing the signals yet. For me to be bullish overall and think a low is in on crypto and this isn't a bear market rally, we would actually have to establish ourselves back above 30,000. And we're not that far now. So, I mean, it could be in the next few weeks that I change my tune. But again, it has to be 30,000 because that's your midpoint. All right. So if we look at psychological levels on the chart, remember that big move up in early 2021 and then the pullback, right? And the low of that pullback of that cycle was right at 30,000. And then we went up and we made a new high and then we came back down. We consolidated here at 30,000 and finally broke lower. So to establish ourselves back above 30,000 psychologically would be huge for the Bitcoin market. And that would actually get me on the side of thinking, okay, maybe the lows are finally in. Until then, I've been through too many bear market rallies that fooled me. So I'm still on the bear market side until proven otherwise. So for me, it would have to be when we get above that 30,000. That's when I start to look to buy pullbacks. And just to mention this too is I've been long and short Bitcoin and cryptos overall, probably about 5 or 6 times just in the last month because of this awesome volatility. But I'm talking more on the macro view, the bigger move. Then I start kind of hodling on pullbacks and buying the positions to hodl versus just looking to trade them on the long side, which is what I've been doing recently. So I think, again, the 12,000 level is still out there. I even think there's a chance of 9,000. I hope I'm wrong. But again, I do think that is a possibility still. So that is a potential flag that goes up, right? And so essentially what we're seeing is that the Fed has this window where banks are allowed to go in and borrow and basically get money from the Fed. And that's what we've seen. So we've seen these banks that have been in so much trouble, they're actually being allowed to take money from the Federal Reserve in that sense. So right now, again, that's kind of like a half a step in that right direction. It isn't the full-fledged where what I want to see is I want to see the money going out to the public, right? So not just being kept within the banks to keep them solvent, but actually saying, okay, QE is to push money into the system, like we saw in 2021 with COVID and 2020 with COVID. And that's really where that next big, that first big pivot would be.
The Fed said it would increase the frequency of the dollar swap lines with the European Central Bank, the Bank of Japan, the Bank of England, the Bank of Canada, and the Swiss National Bank from weekly to daily, starting Monday. The dollar swap lines allow foreign central banks to borrow U.S. dollars while protecting the Fed from downside risks. In a swap, a foreign central bank swaps its own currency for an equivalent amount of U.S. dollars from the Fed at the market exchange rate. After a predetermined time, the bank returns the dollars it borrowed with interest to the Fed. It shows heightened financial stability concerns among policymakers and questions the Fed's ability to continue hiking rates. The central bank has lifted the borrowing cost by 450 basis points since March 2022, roiling asset markets, including cryptocurrencies, last year.
Yeah, so the Fed meets Tuesday and Wednesday, and I do expect a 25 basis point hike. There's a small chance it could be zero if the banking situation really worsens, but it seems like it's being brought under a little bit of control. It's not being fixed, but at least we're not seeing more bank failures at this point in time. So I think a 25 basis point kind of hike makes the Fed save face. And if we remember, like, this is crazy, but just 2 weeks ago, Jerome Powell was out and he basically was like, hey, we might have to raise 50 basis points. So for them to go from him saying that in front of Congress to zero, that would be a little egg on his face, right? So my guess is they want to just do 25, just get a little bit out there. And then my guess is after that, they'll probably pause. Yeah, so, and you're right about that. Like in the last week, we've seen Bitcoin and Ethereum in particular surge, right? We've seen bounces in altcoins, but I love the fact that we're seeing the leadership take over in crypto because we're looking at best of breed that's really taking off. And what that tells us is that there is money in the financial system that trusts Bitcoin and Ethereum enough to go there for safety. And remember, you're seeing the reason why the market, the stock market's decoupled and Bitcoin is going up while the stock market's going down is because of this financial turmoil. People are consciously making the decision that they want to take their money out of the fiat system and put it into the crypto markets. And I think that's fantastic. I mean, it doesn't necessarily make me think, hey, the bear market's over in crypto, but it certainly makes me think that Bitcoin now more than ever has a future in our society. I mean, this is why Bitcoin was created, right? I mean, this is literally why. And in terms of the S&P 500, I am in the camp that I do think the S&P has a lot of downside to go. I do think that what we're seeing in the banking system is the tremors or the earthquakes before the big one, where the economy does spin into a recession due to these massive hikes in interest rates. And that's going to really hurt the S&P 500, the NASDAQ, because again, remember, a recession means people have less money to spend. Less money to spend means less earnings per share for stocks. And that's going to then bring the valuations down quite substantially in the next 12 months.
In other words, the increased frequency of swap lines has cleared the way for an unabated rise in risk assets, including Bitcoin. The leading cryptocurrency by market value is largely seen as a hedge against the banking system and hit a 9-month high above $28,000 late Sunday, taking the cumulative month-to-date gains to nearly 25%, CoinDesk data show. The dollar swap lines have been bearish for the dollar in the past. Bitcoin and risk assets in general tend to move in the opposite direction of the greenback. The last global dash for cash observed during the coronavirus-led crash of March 2020 saw the dollar index surge above 100 and Bitcoin nosedive by over 50%.
Been a bear since the beginning of 2022 based on the fact that anytime you hike rates, and this is the kicker, and I learned this in the 2008-2009 financial crisis, I even learned this in the dot-com crisis, is that when you hike rates this substantially, this quickly, you're going to break things, right? Things can't, you have conditioned, essentially the Fed conditioned us as investors to think that they would always be there to bail us out and they would never give us tough love. Well, they're giving us tough love, and it's causing a breakdown in the system. So I do think that, again, you're in this situation where you have to continue to think that we're headed towards recession, and then that recession will usher in downside, at least in the stock market. I still think it'll bleed into crypto a little bit and bring about potentially lower lows in crypto. But again, lower lows for me is just a buying opportunity at this point. So I'll show you the S&P 500 here. So this is the S&P, we were just talking about it. And the S&P 500, basically, you could see that you had this wedge pattern. We had a lot of sideways chop. We've now broken below that lower trend line. And that creates a situation where we probably do ultimately start the bigger move down over the next month or so in the markets. I do think there could be a technical bounce back to that line. Just that's the nature of charts. But I do think, again, we're headed down. Here's your October of 2022 low. That'll be technical support at 3,500. And then we're probably testing this 3,375 level, which was your pre-COVID high on the S&P 500. So overall, I think by end of year, we could be down 20+% on the S&P from where we currently are, which would take us quite a bit lower, really close to 3,300, 3,000 on the S&P 500. Yeah, so I do think things are going to get so bad that the Fed will be forced to kind of pivot at some point. So, pausing rates is fine. I mean, that's nice to see. It kind of takes the stress off of us having to worry about how high they're going to go. But if you keep rates at 5%, let's say that's still high rates for the overall market and the overall economy. So it's going to be where the Fed has to really come to the rescue. And I don't think they do it in 2023, but in 2024, my guess is unemployment spikes to a level. It's not, everyone thinks it's going to be, oh, well, when inflation gets under 2% or back to 2%. I don't think it's going under 2% for like 5 years. So I think you're going to have elevated inflation, let's say at 3%. The Fed is going to hold back. They're going to say, hey, listen, we don't want to create a monster here of inflation roaring back, so let's not cut rates. Eventually the unemployment gets so high, let's say 7-8%, that they're going to be forced to come out and cut rates, and that then triggers the next buy rally in the markets.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.